the days when scores on math tests and basketball games were the only ones that mattered. Of course, that was before I had a handle on this little thing called credit scores. Are you trying to buy something big, like a car or a house, and realizing credit scores are kind of a big deal? Or are you an overachiever who just wants a perfect score? Maybe both. Good news is, I've got all the secrets on how to build your credit like a pro. Credit scores are basically a trustworthiness number that lenders look at to figure out if they should give you money or not. They affect how expensive it is for you to borrow money, and companies only offer some products and services if your credit score is above a certain number. Credit scores start at 300 and go all the way up to 850. 580 and up is considered not bad. 670 and up, pretty dang good. 740 and up, you are crushing it. And 800 plus is top of the mountain, gold star status. It really helps to know how your credit score is calculated. Otherwise, you're just guessing, like trying to cook a fancy dinner without a recipe. Your credit score is made up of 5 main components: payment history, amounts owed, length of credit history, credit mix, and new credit. That's also the order of importance, roughly. It changes slightly depending on who's calculating your score, but don't worry, it's all more or less the same stuff. All right, time to start building. First, accept up front that this process takes time, especially if you've had a rocky start to your credit building history. It can take 18 months or more after missing a payment to make it up, and that's not even the worst thing that can happen to your credit score. Foreclosures and bankruptcies can take years to recover from. Also, never pay someone to raise your credit score for you. So, can you recover? Yes. It all goes back to those categories and the habits you build around them. Paying your bills and not missing any payments is huge because it plays into your payment history. Payment history is how many payments you've successfully made, and you want to keep that as high as possible, like 99% plus. And the more payments you make on time, the less bad it is when you miss one. For example, if you've made 400 payments and miss one, no biggie, because that's $399 out of 400, or 99.75%. But 48 out of 50 is 96%. Not great. There's very little wiggle room on payment history. Anything under 97% is considered poor, and you want to keep it above 99% ideally. Set up automatic payments if you can, even if it's just the minimum. Credit utilization or amounts owed is the percent of your credit limit that you're using. Aim for 10% or lower. So if you have 2 credit cards with a $10,000 limit each, try and keep your balance below $2,000 total. 30% or higher is when your credit score may start to take a hit. You can also ask for a credit limit increase to drop your percentage. Not all companies let you if you've struggled with payments in the past, but it doesn't hurt to ask. The longer you keep various lines of credit open, the better your credit history is. Some scores just add up all the time you've had your accounts open. Others take the average years your current accounts have been open. So, closing a credit card you've had for 7 years and swapping it for a new one could actually hurt you. Don't worry about that too much, but it's good to keep in mind if there isn't a compelling reason to close a particular account. Keeping all your pennies in one bag is not the move. Having only one bank's credit card isn't nearly as good as a car loan, student loans, and a few different credit cards to demonstrate you can handle debt responsibly. There's more risk, but proving you can manage multiple buckets is appealing to lenders. That's the beauty of showing how responsible you are. A hard credit pull is when a lender pulls your score to take a peek. This usually happens when you're asking for official loan quotes, say for a car or house. This matters because it's a signal that a borrower is, well, trying to borrow. Imagine you have a friend you've loaned small amounts to over the years, and they always paid you back. Now, say they just spent a lot of their money going to France for a couple weeks, and you know they asked 3 other friends to spot them some cash for car repairs after they got back. Are you going to be as eager to lend knowing he may owe 3 other people money soon too? Probably not. The bright side is that hard pulls only affect your credit score for a year, then go away. So don't avoid them entirely if you need to source some quotes from lenders. You don't have to check like every single day, but checking in once a month, maybe when you do your budgeting, is a good habit to get into. Lots of companies automatically give you a preview of your credit score, and these don't count as hard pulls. Rocket Money has one that's super easy to use. You're also entitled to a free credit report from each of the 3 major credit reporting bureaus every year: TransUnion, Equifax, and Experian. Every once in a while, your credit report may have incorrect information. Maybe they said you missed a payment when you didn't, for example. If you catch one of those errors, you can submit a form asking the bureau to change it, which can boost your credit score. One other thing we haven't mentioned, all of this is fine and dandy, but if you're drowning in debt, none of this will help too much because lenders are hesitant to work with someone whose debt-to-income ratio is so high. So make a plan if that's you. Check out balance transfers to see if you can drop your interest rate. Focus on your most expensive debt first and make a clear plan. It's tough to see the end of the tunnel sometimes, but plan it out and get moving. That's it, my future 800+ credit score wizards. If you want more finance tips for basically every imaginable life situation, go right now to rocketmoney.com/learn. Thanks for checking us out. If you'd like to see more videos just like this, you know what to do. Click right here. And as always, like and subscribe. See you next time.